We will bring in Andrew Holland now. He's a market master of the day, Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, good to have you with us here. Thank you very much for your time. I mean, it's, in a way, the markets are kind of preempting a lot of things from 2024. 2024 is expected to be a story of rate cuts and, sort of global easing. Not as if tightening has hurt markets a great deal, but easing should help. That's the narrative, at least right now. What's your sense, Andrew, as we kind of head into the end of the year? Does the market have more legs here to do well?
Yeah, I think it does, Prashant. I think, the easing that you're talking about is something, we've discussed throughout most of this year. It's playing out a little later than maybe I was expecting, but, that's the catalyst. And the encouraging factor, if I look at just say the US market, it's not just those kind of 5 or 7 stocks which are moving the market. Even the Russell 2000 now is starting to perform. So it's telling you that there's a broadening out of the expectations for growth, for the domestic economy going forward, even though, you could be still skirting with recession. I think the market is now saying that we can look at some of the kind of mid and small cap stocks. And of course, that translates, when I think about here, to the same kind of argument is that whilst the index will, I still think, doesn't really have that catalyst right yet to kind of move higher. It's the what's below the index which is going to be more interesting. The themes, whether it's a mid cap theme, whether it's a renewable energy theme, all of these will continue to play out over the next 12 months. So I think again, remain constructive on the market. We will have some kind of hits on the market as we enter into 2024, and those could be ranging from bond yields maybe not coming down as quickly as people expect, or any jitters around elections going forward as well. So those are kind of things which are kind of knowables, if you know what I mean. So it's easy to kind of weave around them.
So we do talk a lot about markets and their move toward in and around election year, right, Andrew? But just refresh our memory for us, because this is an election year both for the US as well as for India. So how much importance does it assume from a market standpoint, and what should retail investors be looking out for?
So I think, obviously it's a bit early to look at the elections both here and in the US. It's some way away. Of course, you've got elections, of course, in the UK as well, so don't forget that. So there's many elections next year, actually, so it's going to be an interesting time. But I don't think it's something I don't kind of think about right now, because it's too far away and the markets are probably not banking into that. I think the markets will look very short term into what's happening globally, and I think those would be the factors which push the market in the very short term.
Hi, Andrew. Good morning. Good to see you in. What about the IT pack? We spoke a couple of months or so ago, and we were talking about this, that the IT results will be a little bit tepid, maybe the outlook as well is a little bit gloomy. But there is a lot of buying interest out there. How are your positions on the IT names? Do you believe it's time to start nibbling in, or do you say that maybe there's still more pain, so you'd rather wait by?
I mean, it's your expectation. When do you expect interest rates to fall? If you're a big believer in that, then tech in the US will continue to power ahead, and that will be a tailwind which drags up our IT stocks. If that's delayed for any reason, then obviously you'll have the same problem. I just think there's more action in other sectors where you can make good returns over not just the short term but medium term as well. And IT doesn't really excite me that much to kind of say I need to be in there right now. There's other sectors which I think can give you a lot more kind of upside.
Okay. Any other sectors where you think that there is potential? There is a big theme that everyone's talking about, which is this move to renewable energy, right? And the government has a big focus on it. There's global focus as well now with the COP28 kicking off. Is this a theme for investors to look at here? And if yes, can you just, so identify, it's a broad umbrella. Under that, what are the focus areas?
Yeah, I mean, there's many themes to play, and it's a combination of the defense sector will continue to do well, renewables. We have you have an IPO coming out, which is geared towards the renewable kind of funding side of it. So all of these, companies will continue to do well. So the whole power sector is something to look at, and in particular the financing side of renewable energy. So I think that's a theme that's going to play out. We talked about travel and entertainment before, and I think the themes around premiumization in the beverage industry, both alcoholic and non-alcoholic, will continue to go forward as people move up that curve. We've seen it. You've talked about it many times about people buying more on the luxury items. That's going to be a big theme for the beverage industry over the next 3 to 5 years. And I think the banking sector has got to be a theme you play. But I think the problem for the banking sector is what's holding it back. And I think after what the RBI did, I think we'll see analysts now having to temper down their expectations for loan growth and therefore for earnings, which will obviously have a greater pressure on NIMs as well. So I think until we get through those earnings downgrades, I think the banking sector will just kind of hold steady at best.
Just a few other names. New India Assurance. I mean, it's almost as if the market is latching on to what stuff which is, and I think that's true as well, underperformers. So insurance was a space. It's starting to do well. It's starting to pick up, right? So look at New India Assurance. It's up 9% now. And I was saying it's up 30% this month. So it's turning out to be a good month so far. And look at the reinsurer, GICRE. GICRE is up, I think, 5.5%. And here as well, about a 25% move this month. So it's done well. I mean, these are stocks which have not done very much for years. In a similar way, in oil marketing, I think falls into the same kind of bucket. And it's that package also having a good November. Lal PathLabs has come up about 4% while we were speaking with Andrew, 2,700. So it's got very strong volumes. And there is Credit Access, which is up about 3.5% as well. So 1704 on Credit Access. So these are some additional newer names which are coming through. Kesoram Industries, of course, we reported the story about Ultratech eyeing assets here. Kesoram started, I think, was up 4%, it's up about 3% right now. That's also moved up. This month, Kesoram, of course, has moved up some 60%, 61% or so. So we've been kind of talking about that story. Andrew, anything from these two? Oil marketing, I mean, typically before an election, that pack would get all fearful, right? Price revisions would stop and that kind of thing. And stocks, but this time, 30% going into these elections, oil marketing. I don't know if you have a view or a contra view. And insurance is a space, and if you like anything, if you own anything there.
Yeah, no, insurance is a sector we've been flipping around into from the banking sector because there's no real catalyst for the banking sector at the moment. So insurance has been one where we've been increasing our kind of exposures, and that's playing out very well for us. So we'll continue to do that within the financial sector. There's going to be pockets where you will find that you'll make some good money whilst maybe the banking sector itself just consolidates until the earnings downgrades start to come through. I think what you said is quite interesting because obviously one sector you missed of saying is chemicals, and I'm seeing lots of reports now saying that chemicals have bottomed out and it's time to buy. And I think that's, you always get these laggard sectors moving higher after being beaten down for some time. And that's where you're going to get some very sharp positive price reactions. I'm not saying fundamentally you should be rushing towards it. I think the themes I mentioned are ones where you see, very strong earnings growth over a long period because of the fundamentals.
Sure. Andrew, always good talking to you and happy Thanksgiving to you, your team. It's been a good year for all of us in every way, right? Health, wealth, and hopefully it'll continue to be the same in the next year as well. So thanks a lot for being with us on the channel.
Thank you so much. Thank you.